There is a quote from legendary investor Mr. Peter Lynch that I think you have to learn that there is a company behind every stock and that there is only one real reason why stocks go up. Companies go from doing poorly to doing well, or small companies grow to large companies. So we need to be cognizant of the fact that we are not just buying a stock but buying a piece of a particular company. Let us discuss one such company which has good fundamentals, and it is from paint sector, which is Sirca Paints. So Sirca Paints India is engaged in business of manufacturing, selling and export of wood coating and other decorative paints under the brand Sirca. Talking about company's key products, company's products range from wall coating, metals, glass coating products. Its offering under various brands include luxury Italian wood coating, high-end wall puts. So we can see that the company is operating in premium segment. Other companies in paint sector, mainly Asian Paints, Berger Paints, they operate in mass segments. They work on selling paints in a high volume, but Sirca Paints is uniquely positioned because it sells premium paints. Talking about its brands, so Sirca Paints has premium Italian wood, metal and glass coatings. In wood, it has wood stains, polyethylene, polyester, acrylic finish, UV products, wood fillers, wood care products. Likewise, it has products in glass and metal segments as well. In glass, it has biocomponent, water-borne and solvent-borne pigments, top coat for coatings and color effects. In metals, paints are coated to protect from corrosion and to add artistic features to metal surfaces. Talking about companies' financial performance, we can see that there has been a consistent growth in revenue. So 5 years CAGR was 20.9%, and profit growth also was having a CAGR of 18.3%. Company ROC number is also improving with each quarter. So we can see that the performance of this stock is decent. For last 3 years, the stock has given a CAGR of 31%, and for last 3 years it has given a CAGR of 24%. If we talk about compounded sales growth, then last 5 years it showed compounded sales growth of 22%, and last 3 years the growth was around 30%. If we compare it with profit, for 5 years CAGR was 15%, and for 3 years it is 45%. So we can see that the margin of the company has improved in recent years. If we look at the latest quarterly performance of the company, there has been a YOY increase of 21% when it comes to sales, and 32% increase in net profit. Compared to other companies operating in same area like Asian Paints and Berger Paints, Sirca Paints has shown a good quarterly performance. It is also trading at a PE of 34, which is comparable. It has a market cap of 1748, which is pretty small compared to other big players like Asian Paints, which has market cap of excess of 3 lakh crores. Company's trading PE is below its averages, so it has average of around 41 and is currently trading at around 35. Talking about company's technicals, company is trading near its support. So company has a support of around 302 and it's trading at around stock price of around 318. It has a resistance of 438. So if we take it to 438, company's stock price has a potential of giving returns of around 35%. So the Sirca Paints is the company which should definitely be in our watch list. The next company which we'll talk about is RVNL. So Rail Vikas Nigam Limited was incorporated in 2003 by Government of India, and it is engaged in business of implementing various types of rail infrastructure projects assigned by MOR, including doubling gauge conversion, new lines, railway electrification, major bridges, etc. Company and its subsidiaries are engaged in business of implementing various types of rail infrastructure projects assigned by Ministry of Railways. including doubling, gauge conversion, new lines, railway electrification. So we see that the company mainly operates in various projects related to railways, and it's pretty much dependent on the expenditure by government. Talking about company's recent performance, company has shown 70% increase in its sales YOY and 26% increase in net profits YOY. Company's current stock price is around 300 and market cap is around 62,000. So company is not small, since it has given a pretty good run up in last few years. Company's market cap has gone up. Current PE of 42 is also higher than its long term average. So we can see that the company was trading at a PE of around 5 to 10, but suddenly the PE has shot up because of the increased focus of our government in building rail infrastructure, and sentiment wise the stock is doing well. Its performance when it comes to profit and sales has been good in recent years. Again, we see the compound and sales growth for last 5 and 3 years was 17 and 12% respectively, and profit growth was around 20 and 16% respectively. So company is not cheap when it comes to valuations, and as we can see, sales and profit growth also is decent but is not very high. If we talk about its technicals, then current trading price of 300, company is trading between its support and resistance. It has support of around 207 and resistance of around 344. So technical wise also stock is not cheap. If it comes down to levels of around 207, then we can think of buying this stock. But looking at the valuations, stock is not cheap by any means, but this stock can be in our radar. Indegene operates through 4 key business divisions, each designed to address its unique challenges and opportunities in the life science sector. Enterprise Commercial Solution helps life science companies optimize their digital marketing operations. Omnichannel Activation Solutions enhance the promotion of biopharmaceutical products and medical devices through a digital-first approach. Enterprise Medical Solutions establishes centers of excellence for consolidating regulatory and medical operations, including medical content writing, regulatory submissions, pharmacovigilance, and real-world evidence-based research. Enterprise Client Solution enhances drug discovery and clinical trial efficiency through digital-enabled patient recruitment, clinical data management, and regulatory submission. So we can see that the company has a very unique business model. It sort of helps companies to optimize their digital marketing performance. In FY23, Indegene's revenue was primarily driven by Enterprise Commercial Solutions contributing 59%, followed by Enterprise Medical Solutions 24%, Omnichannel Activation 12.5%, and others at 4%. Indegene's revenue model includes resource utilization, charging clients based on employee hours, engagement time, fixed price contracts for specific projects, outcome-based models where fees are linked to the impact of sales and marketing efforts. With strong client relationship and high retention rates of over 120% in the past, Indegene ensures recurring revenue through its sticky solutions. Now, if we talk about company's performance in the past, we can see that there has been a consistent increase in sales as well as in profit. However, with new listed IPOs, it has been observed that the company shows a good performance in last 3 years, because that is what is checked. But we'll have to see if that performance is being replicated in future as well. If we look at its 3 years CAGR returns in terms of sales, it is 53%, compounded profit growth of around 110% for last 3 years. But an interesting thing about company shareholding pattern is that company doesn't have any promoters. The company is being held by FIDIs and public. So this is an interesting thing with this company. It is not the fact that companies like these don't operate, but generally with small companies there are promoters, and if promoters are there, then it helps build trust. Once trust is built, company grows bigger, then even without having a promoter, company can run well. We have examples of companies like L&T, which also doesn't have promoter but still are running well, but those are big and matured organizations. So this is another factor which we have to consider while looking at this company. Now talking about the technicals, company got listed and currently is trying to take a support of around 550. We'll have to see how the chart progresses going forward. Then only we should be in a position to get clear-cut support and resistance. But for now, we can wait for few quarters for company to show its results and then take a call if we want to take an entry. If someone has been able to get it during IPO, then I think we can book partial profit and wait for next quarter for company to show